It doesn't matter if finally there's a truce in the trade war between the US and China. Everything comes down to one single scenario. The Federal Reserve going to a zero again, and this time negative interest rate policy to save the markets. Welcome to your weekly equity report. My name is Jose Ricardo Tejaen, and today I want to take you into 3 ideas. We're going to do this in about 7 to 10 minutes, and I'm going to give you what I think based on the evidence that we have as far from the insiders when it comes to the stock markets, applying Hawkeye traders, which is one of the best and most comprehensive technical tools out there for traders, also applied by hedge fund managers, and looking into the FX space, how you should be positioned into full summer 2019. As usual, please remember that past performance does not constitute future performance. At all times, this information is for educational purposes only. However, we do know that you are looking for the best ideas out there. So if you decide to apply our ideas, make sure that you apply proper risk management. The liability is only on you and not over anyone, myself as an analyst or anyone working the team at Market Charts Daily. Okay? Having said that, let's begin. The most important is that I want you to think. Every week when we record these videos, ideas that we publish in our YouTube channel, you need to project. You need to have an imagination. That's the difference between humans and animals. Animals cannot reflect on their experiences. They cannot project into the future. We can. And when it comes to trading and investing, what you have to do besides that is assessing your risk. You have to assess the risk. If you are capable of doing those two, you absolutely have an opportunity to win the game. Now, it's a fact that you have to face challenges as far as capital, as far as execution. That can be solved. But if you don't have the ability to see the future, to project these ideas and how you can position yourself into future developments, you will never make money in the markets. The other thing that you have to do, it's critical. You need to manage your risk. How you do that? You need either to set a capital, that is your risk capital, that you're willing to let go if things do not go your way, or if you do not make the money that you were expecting. And the second is that once you're making money, you need to balance out that position. That means that you have to break even the initial position. You have to go with different levels, take out some winnings. It all depends. And that's what is this about. This is about teaching you exactly how to do it, how the professionals do it. Okay? Are you ready for that? Let's begin. So the first idea, we're just going to go directly to TradingView. And we're going to go into the SP500 futures contract, not the CFD, and this is the continuous contract, next contract in front. The reason why I use this is because I need the volume information. This volume information I need it because I use Hawkeye Volume Pack. If you go to the description of this video, I will give you the links for 1, the volume price analysis ebook, and 2nd, you can sign up for a trial of this tool. Okay? You have seen me using this to exactly get trades short the US dollar versus Canadian dollar back in NFP last month, where we made up to 400 pips initially. You have seen me using this while I analyze securities following the insiders. So it's a combination of having the fundamental in place and the technical tools. Okay? Now, if you pay attention, pay close attention to these red dots. These are the stop losses. So the professionals right now are short the S&P, and the stop losses are about this level. And this is why it's so critical. I repeat this tune all the time. If you're a short seller, you're in for a lot of pain. If you think that buying is difficult, short selling is even more challenging. But right now, there's a lot of pessimism. There's a lot of negative information in the media, and everyone is drinking the Kool-Aid that things are about to. That the economy, that we're about to go into recession. That is absolutely a baffle with the idea. That is not true. There is no real evidence. In fact, the buybacks, it's true that the buybacks from different companies, they have been slowing down. But the insiders, they have been buying. We have mentioned this a couple times in our previous reports. Just in May, when the market went down about 6.71%, the SP 500, I have discussed these on previous issues, it was an amazing opportunity for insiders. They bought plus 150, probably close to $200 million worth of securities, stocks. So that tells you that they took advantage of that. I haven't reported anything the last couple of weeks because there are not a lot of buying going on. Nothing that really matters. That means that they have stopped and they consider that the value of their companies matches their own valuations. So when we see something, and we'll discuss about an opportunity that I have a risk play in place that I want to share with all our readers, it's you want to take an opportunity. Why? Because there's no other way. Even if Trump and Xi Jinping, if they don't come to settle an agreement, this is going up all the way to hit between 3,120 and 3,170, 75. The reason is because the market requires to absorb liquidity. That's number one reason. Okay? And that's the way it works. The market, let's see if I can just have this here. Number one reason, market needs liquidity. And if the market in fact wants to go down, it has to push higher. Trick everyone. Take those stops out. Then it crashes. Simple. It is simple, but but it seems that market participants still don't get the memo. That's what it is. So this is going to make a new high. Plus, think about this. Probably you can say, there are a couple versions you can come into technical analysis. You can say this is head and shoulders. Here's the head. Here are the shoulders. I go more with the V recovery. This is a double top. It's going to make a short pullback and pull back, make a pullback, another corrected pullback minus 3%, and then break. Go all the way to take out these stops, absorb that liquidity, maybe even push to 3,200 and then go sideways, and then we can talk about crashing again. Remember, we published this video about 10-12 weeks ago. We have a target of 3,500 in S&P 500. Of course, if we get there and when we get there, the Dow Jones can easily be trading close to 27,500 points. Keep this in mind. So we're not just coming up with this because we think there are tangible evidence, because we're applying the technical indicator Hawkeye trend plus stops. We know where they are. They are short in the market, probably somewhere between the highs, of course, and this range. And then the market went against them. So the professionals, they're not going to set their stops tight. They said wide ranges. For those trading the S&P futures, 100 points, it's a lot. It's pretty decent. And it's a lot of money to hold these stops. Because if they get stop out, they will lose a couple $1 million. So keep this in mind. Now, the second thing, and this is for short sellers to just remember, this is something that we know based on this leading indicator from Hawkeye traders, and also the fact that we know how much the insiders bought in clusters back in May when the market was actually down minus 6.71%. Now, there's an opportunity, and the second idea in this weekly equity recap that we're including 3 times our ideas, the insider report, Hawkeye traders, and ideas from historical levels applied by Ross Mullins, our head of trading. Now, we take a look at this company. The CEO and president, Susan, don't have the name right now. You have it on the newsletter. She got in at 388. We're trading right now at 395. Added about plus 13% more shares. It's an investment of $200,000 cash, direct investment. Couple things that we have to look as we follow the insiders. Remember, teachings, instructions from our senior editor, Ross Givens. If the CEO of the company is buying Isn't that an indication that something is good, something is about to happen? After all, those are the men and women building up value for shareholders. And if they're risking their dollars, if they have skin in the game, isn't that a good sign, a good signal? Of course it is. Now, take a look at this company, CALA Biosciences, ticker symbol CALA. And basically what we have here is a sideward markets all the way from January 2018, about a year and a little bit, year and a half. Now, obviously it's a textbook play in technical analysis. We're looking for a breakout. Because of the insider, this is where I'm looking at make a risk play. And we know she added the $200,000 worth of stock and at 388. So if I want to take a risk, I just have to look into the values of the Hawkeye traders, see how we combine the technical view as we get the data from the exchange and the fundamental value of having the insider adding a substantial, at this level of the company, substantial amount of money directly, not buying, not converting options, no, direct $200,000 into the company. Now, we can use this as 69%, that will be too high, so I'm going to play it with as I know. The way I do it for this type of security that is below $5, I'm taking 32% risk, and I'm looking as target number one. I will be looking to hit the resistance. This is a historical level, comes all the way from January 2016, comes here on April 2018, and again sometime on March 2019. So that will be my first target, and that will be 57.48%. I'm not discounting that this can go to the second level as the price rotates, and if prices break and open above 750, then we're looking at higher rotation all the way to $9.86. Time duration for this trade will be about 6 to 18 months. During the first 6 months, I'm targeting at least 60% going into previous highs all the way back to March of 2019. My risk, of course, will be set at 32.26% for CALA Biosciences, ticker symbol CALA. Wonderful. Now let's keep going. I'm going to take a quick look and throw a bonus into what gold can be doing right now. We have a previous high. We nailed this trade all the way approximately about 4-6 weeks ago. We started trading at 1260 all the way. We have several targets. 1460 was on the table. We actually had a target all the way to 1400, 1420. Now, what can we expect? If you look at the monthly chart, and this is just to give you an idea, I always like to look at the monthly chart and look at the big picture, where we are, what we're doing, and what to expect from the markets. I'm just going to take Fibonacci all the way from this level, previous level, and going down to make my assessment. If you look at this, you have to understand that right now we're not too far from the 50%, which is 1,480. Now, the key level, if we think about how high it can go, is the 61.8 Fibonacci all the way to 1,575, probably 90. This is the next level where I can see these actually getting massive sellers. Now, as you can see, we have this bizarre situation where we do have the SP500 trading at higher levels, but we still see how gold has been beat up all the way. It shouldn't be a surprise. This is a common misconception. For example, even if mutual funds were to have the money, they are not allowed because it's not a structure for them to buy gold. You were required to be a hedge fund to do that. At the same time, not everyone can be invested in gold. It requires is a complex conditions, complex structuring on the vehicle. You can be buying, it can be either the ETF, you can be buying futures contracts. There are expenses involved. So it depends. Not everyone is in that. So you can have mutual funds that are taking an opportunity because they have no other reason. They have been in cash for a while and they have responsibilities. They have to feel some returns that they have to deliver to to their investors. So therefore, they need to expose capital. They need to go into the stock market. At the same time, they're hedge funds that they need to protect themselves. So they go long gold. Now, if you see we're trading at 1400, if we in fact go all the way to the 61.8% Fibonacci, looking at the long-term trend, we're talking about another 200, between 150, $200 to the upside. The risk itself, if you will still want to be long, it will be all the way to 1328. Now, at the same time, if in the short term, which is what we expecting based on the information we have, if in fact we're looking to a retracement before that push higher, absolutely we can think that 1,282 will be the breaking point, sort of point of control that we have to consider for the current bullish leg, not fully bullish trend in gold. And therefore, if prices break below 1,282, then we'll be looking to enter in a bearish correction for the shiny metal. Again, we have right now, we are not too far from 1,348. This can be the level. And then prices, if we use trend Fibonacci, we'll look at this. We will be taking the level and pushing higher, and this can actually be a surprise and take gold all the way past the $1,600 per ounce. This is something to consider. Now, so we mentioned we can also take a look at the levels, and one currency that you want to, a couple currencies that you want to be long is risk. If the risk mode, if we go into risk mode in the next couple weeks and all the way into summer 2019. Now, we want to take a look at the USD JPY, and the reason is, take from Owanda, they have a good volume feed. Great. Now we take a look at the monthly chart. We can see how we have these rejections. We had the previous month ended rejection 106.71, and now we're building up. As we have this target for the SP 500, we know that then we turn into risk on mode, and Yen crosses tend to take advantage to the upside. They push higher. If that's the case, that's how you want to position. Aside of the Australian dollar versus the US dollar, which can be one option, you also have, you can take risk in the pound versus US dollar. But my favorite play, it will be to take the US dollar versus the Japanese yen, because it's a self-reflection. As investors move from the sidelines, they sell Japanese yen, they buy equities, and therefore it's not necessary that the US dollar is appreciating. There's no strength at all that we have to count in, but is how the currency mimics equity exchanges. So if the equity exchanges are going to move now and they're going to make new high, expect at least an important reversal to the upside for these US pair. And the levels to target, first, just looking once again, applying Hawkeye trader trend plus stops. We know that the stop losses for those that are short, these red dots right here, we are back all the way to 112.80. If you take the price range, let's say actually the risk, the long position. If we use the last month, the month of June, as my exit, I probably use all the way up 106.43. That will be a 2%. And then looking at 112.80, I'm looking at a 3.88 gain. This is a ratio of 1.87. For every dollar you risk, you will be winning about $1.80, which is not the typical 2-to-1, but still something that we shouldn't let go. It's an opportunity. I like to take it. I will show you that I already have it in an illustration. These are probably, let me just show you. There are a couple illustrations that we have. Let's see. There's actually one that didn't work well. This is the one that worked very well. This is one we have been sort of illustrating a portfolio, how it will work for clients in the United Kingdom. And if you take this, see how the 1073, that's when we enter. The stop loss, actually, we place it at 106.80. And you can see how the market went all the way to 106. Well, apparently 106.70, but that's the Owanda feed. That's a different story. So this is something to consider. And if we target, we have our target 112.37 in one of the positions, 114. But the reason to have that idea is that if you look here, we'll look at 115 as the last level for the stop loss of those are short the US pair, US dollar versus Japanese yen. It's very important. If you're looking to go long equities, you might as well take a long the opportunity at your own risk. Of course, you have to manage your risk. We don't know what is your capital, but you shouldn't let go an opportunity to also maximize your earnings by going long the currency, US dollar versus Japanese yen, based on our analysis. Applying Hawkeye traders, we know where the stop losses, the market would absorb that liquidity and will take those stop losses out. And we can go as high as 117, but initially we target, as we can see, 112.80, and after that we can easily target 115.16, and there we will have a better risk versus reward ratio. Okay guys, I want to thank you. It was a great opportunity for me to review the markets with you. Please make sure go to the description of this video. If you're ready to know more about insiders, go ahead and click on the link to watch our editor, senior editor, Ross Gibbons, explaining more about why insiders do what they do and how you can take advantage of that information. And also, if you're ready to apply this comprehensive technical tool, Hawkeye Traders, no excuses. We have it ready for you to go on TradeStation, NinjaTrader, TradingView, MetaTrader 4, and MetaTrader 5. So go to the description of this link, besides liking the video, of course, and download now your free ebook so you can learn how to use volume price analysis and get a free trial of this package. Hawkeye Traders, Trend Plus Stops, Hawkeye Traders Volume Pack, and Hawkeye Heat Map. Again, for MicroStrategies Daily, this is Jose Ricardo Hines signing out, wishing you health and happy trading.